afternoon, good evening. How are you doing? How are you, my amazing souls? It's your blissful soul, Katrina WW4 Wajiko. I welcome you and I welcome you back to this YouTube channel for another financial literacy class. Remember, this year I am opening two WhatsApp groups that I really need you to join. One is called the 2026 MMF Challenge, where we are challenging ourselves to have invested at least 100,000 in an MMF account by the end of 2026. And the other one is called 2026 Shares Challenge, where we challenge ourselves to having bought shares worth at least 150,000 by the end of 2026. So this is me inviting you once more to begin. Of course, I'll put my contact running there. You send the money to that number and then you send me the M-Pesa message to WhatsApp. Then you open your WhatsApp restrictions because I don't send links. Of course, you understand why. So I'll add you to any of the groups that you want to join or all of them. If you're really feeling like this, yeah, I want to really get bigger and better with my finances. So today we are going to discuss about MMF. So why should you invest in an MMF? Or first and foremost, what is this thing, animal? What is this thing that Katrina is calling an MMF and asking us to join a group towards investing in that MMF? Well, let's get there. So I have things here because I'm paid to talk. I live off talking. I'm a musician, I'm an MC, I can really talk. So I have some notes here to check me. Yeah, like Katrina enough. So an MMF in full, it's a money market fund. And this is an investment fund or vehicle, or the way you're going to call it. It's an investment fund because it allows you to earn interest from the money you deposit in it. So that's what makes it a little bit different from the banks, the M-Pesas and such, because you'll be earning interest that can help cushion your money against inflation. You use a cushion on your seats, or you could just sit on the hard wood, but it's not comfortable. So the cushioning in the seat is there to help you be comfortable when sitting. So when you cushion your money against inflation, the inflation is how the prices of things are rising and falling, that and ours has really been rising. So you'll find whatever you could do with 500 bob at the beginning of 2025, we were not able to do the same at the end of 2025 with the same 500 bob. What happened? Inflation. The economy rose, things rose, the prices of things rose. So this interest is to help your money to be able to fight with the inflation, that cushioning, that protection against inflation. Are we together to that point? We are? Good. So the next thing is we consider an MMF the starting point when you're starting your investment journey. Where you begin from, that's the MMF, that's the money market fund. It's like your foundation of investing, all right? Because it helps you to build discipline towards bigger investments, okay? So when you start from here, build your discipline muscle, your resilience muscle and everything, you're able to resist removing it because, oh, I have some 10K, I've seen some nice shoe, handbag, whatever it is, and you didn't take it out, you're learning how to be disciplined in other areas. So an MMF is your basic when you're starting the wealth creation journey, the financial freedom journey. That's your basic. That's your starting point. That's the kindergarten, the foundation of investing. And how do we use the money market fund? The money market fund is the emergency fund. And we believe every human should have an emergency fund because life happens and emergencies don't have to be bad. Please don't misquote me. Emergencies don't have to be bad things. You've lost a job, you've lost income. It can even be a good thing, and you're not prepared for it at that time. So we always say when you're starting the investment journey, the first thing is to have an emergency fund. Because even if you have all these other investments, like the shares, the stocks, the ETFs, the real estate, and all that, if you don't have an emergency fund, you will withdraw from them, which might be quite expensive at that time. Because if it's you have shares, you have to sell them, and maybe that time you're selling them at a loss because you urgently need money. So that's why you need an emergency fund, a money market fund, or MMF in short. So we always say start with an emergency fund, because if you don't, you'll still withdraw from everywhere else when you need money urgently. Let me put it that way. So that's what we use a money market fund for. And most times it is advised that in your wealth creation journey, wealth creation is also having peace of mind. And an emergency fund gives you peace of mind. Like in which way? You can calculate, maybe pay everything via M-Pesa for a month. Or if you can even pay with cash and you're disciplined enough to note down, today is Monday, like I'm making this video on the 2nd of January. Hey, Happy New Year again. So this is the 2nd of January. You tell yourself, today I spent 200 on this, 500 on that, 300 on that, total this. If you can do that, fine. You do that for a whole month. If you already don't know how much you use per month. If you don't know how much you require in general, in total per month, let's say for one person they use 10,000 per month, another person is 20, another person is 50,000 per month. Like from your rent to your shopping to traveling or transport expenses, that is fare, or you fuel your car and such. You see all those things that you do during the month that require money. Note them all down. So how much do you require per month? If you have school fees, you have a child in school, how much do you use in your household per month? If it's 50,000, your emergency fund should have the list as a beginner should be 3 times what you use per month. So if it's 10,000 times 3, that's 30. It's 50 times 3, that's 150. But to be on a safer level, we say it's advised to have 6 months of how much you use per month. So if 6 times 50, 6 times 10,000, 6 times 20,000, depending on how much you do per month, you need to have that saved or invested in a money market fund, which is your emergency fund. We getting it? So you see, an emergency fund is really vital. Oh, sorry about that. It's very vital in your wealth creation journey, because now your mind has peace. So now that you have that, you can now move to these other investments. Or you can be putting, if you'll be disciplined enough, you can say, I'll be topping up my investment fund and getting these other investments going as well, if you want to do them at the same time. It's okay, your discipline levels are going to count a lot. And that is why I'm creating those two groups, because in the groups I share more info on how to start. I know there are people who don't know about an MMF. They've never done it. They don't know how to open accounts. They don't know which investment companies to go with. I give that info in the groups. For those in the shares, again, you don't know all that, you don't know how to start, I give that info in the groups. And then we also keep each other accountable, because this is my philosophy. Discipline without accountability dies along the way, it fails. We are not always disciplined enough to see some of these things that we commit to see them through to completion. So in the group, we keep each other accountable. We help each other to do this. We help each other to go around it, motivate each other, challenge each other, encourage, inspire one another. And one thing I need us to understand, not everyone will get to 100,000, because we're in different levels in life. Just stay true. Okay, be disciplined enough to stay true to your own course. If at the end of the year, what you have managed, having done your best, having made adjustments here and there, is 10,000, 5,000, 20, 50,000 in that MMF or worth of shares, it's good. If you have done above that, great. Some will get there sooner, others at the end of December. Still superb. We are in different lanes in life, and you have to respect that. Okay? Yeah. So it's for you to decide. I have been asked questions, like most of you have come to my inboxes and WhatsApp, and I've been asking questions. And there are those who are getting it all wrong. They're like, the way they're understanding this MMF thing, especially I'm told this MMF thing, is that I'm bringing us together in a WhatsApp group too, and then I don't know, Katrina creates a group, and then an account where we pull money together to reach 100,000, and I'm like, nope, nope. Katrina is not doing that. Nobody's doing that. It's individual. I guide you on how to open accounts yourself. I give different types of accounts you can go for, and then you decide, like companies, and then you decide which one you want, and then you yourself, you go and open that account. So all the details, the passwords, everything of that account is in your name. I'll never know it. Okay, I'll never know your passwords. Nobody will. And then you are the one to know how to get to either the group's target, which is 100,000 or 150,000 worth of shares, or no, by the end of the year I can do 10,000. But I'll be pushing myself as we encourage ourselves in the group. Yes, so I really needed to clear that. We are not opening an account where people are putting money together. It's not a merry-go-round, or it's not a chama kind of thing where we are going to remove the money in December and say, Katrina contributed 20, this one. No, 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 no. You're going to open the account yourself, and you're going to be saving yourself. You'll decide. I get money monthly, weekly. Freelancers like me, once this time, it's not regular, irregularly, or you're on a payroll, it's monthly, so you'll be putting it monthly. You decide, and how much you can be able to. Okay, so yeah, it's really upon you, it's really you, it's your account, you're the one doing the mathematics of, I can be putting 1,000 bob per month, or this amount per week, or this amount weekly, daily. It's for you to decide after you open that account. Mine is guidance, and then we motivate each other, keep each other going, 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 going. All right. So yeah, that's what I needed us to discuss today. So what happens for you to get that interest? This professional that is the fund managers of the one you're going to go for. They invest your money mostly in treasury bills, things that are quick. Because you see, with the money market fund, you can decide to withdraw and they will have to give you back your money. So they invest in things that they can easily get your money back quickly as well. It does encourage cash flow, but you need to be disciplined, okay? So that you don't just go removing, then it won't make sense to you at the end of the year. But that's basically it. They understand it's an emergency fund, an emergency can happen, and then you have to remove. So they invest mostly in treasury bills and such, very low risk investments. And the other thing, your capital, the money you put in first, that one is safe. Your capital is guaranteed, okay? It is preserved, and then you will be getting interest. Now you might find a company is giving maybe 11 or 10 or 13, 12% interest rate. If it's PA, that's per annum. So you can be checking every day, you're multiplying, you're doing the mathematics with that 13%. It's per annum, but it is compounded daily. Daily you'll be seeing an increase, even if it's in cents in your money. We all can't get the same interest because we are on different journeys. Maybe I do a lump sum, I put the whole 100,000 at once. I'll be get so that now it's just waiting there for computing. Computing is now that getting the interests. They do the mathematics and I get my interests. It's getting in every day. I'm seeing changes. There's another one that is putting 100 bob daily. There's another one that is putting 1,000 bob weekly. Someone else is doing 10,000 monthly. You see, different variations. So we are not keeping the same amount of money at the same amount of time. That's where there will be those differences, but the rate is the same. If the companies this month or this week has given 13 or 12%, it's 12% per annum. But depending on what I have in there, the more I have in there for much longer, the better for me. Okay. So yes, and investments. I think I should say this in all videos. Investment is slow, steady income. It's not I put in today, I get big money tomorrow. No. If that's what you're looking for, then it's not for you. It's not. We wait. It makes sense when you have bigger, larger amounts of money. Larger sums of money means bigger interest or bigger dividends when it comes to stocks and other investments. So you can put today 100 bob and you're checking. It's not even gotten a shilling, You have to wait. You have to, that's the discipline you're talking about. That's why you need an MMF. It teaches you that discipline, that compounding is slow, but it is daily and it is steady. Slowly, you'll see the results. If you have the patience to see it through and the discipline to not be touching, seeing a beautiful purse, those nice shoes, going out with friends, that's not an emergency. That is something you can plan for. So you don't run to your emergency fund for that, okay? But if you leave it over time and continue keeping, for me mostly what I do is I don't keep checking every single day. You finish, you close your computer or your phone and leave that to rest, okay? Yeah. So hit me up when you want to begin this journey. We'll continue with these kinds of videos, perhaps once a week, to be talking about MMFs and shares. So see you on the next video. Oh, and see in the WhatsApp groups. Send your monies. Let's do this. Let's get bigger financially in 2026. And let's do it together.